If you've been thinking about buying a home in the coming year, there are a few good reasons why you might consider buying a home sooner rather than later. The first of these reasons is the first-time home buyer's tax credit. We've had a tax credit in 2008 and 2009, and there was an extension to the 2010 tax credit, but it ends on April 30th. So if you'd like to take advantage of the $8,000 first-time home buyer's tax credit, you need to be in contract by April 30th and closed on your new home by June 30th. All indications are that Congress will not extend the tax credit again, so this is probably your last chance to take advantage of it. Secondly, all of the indications are that interest rates will go up in 2010 as well. And the last projections were that by the end of 2010, interest rates that are at around 5% today will be at 6%. On a $200,000 home, a 1% increase in your interest rate is equivalent to about $160 a month in additional payments. Even if interest rates go up only 0.5%, that's still a good $80 to $85 a month in extra payments on your new home. A third good reason to buy a home now is that, again, all indications are that home prices will continue to stabilize and go up. So with the combination of an expected increase in interest rates, you will be paying more for your home within the next 12 months, and you'll be paying more to carry that home as well. The final reason to think about buying a home now has to do with the proposed changes to the Federal Home Administration loans. Over 60% of home buyers are using FHA loans to get their mortgage these days. And there are a number of critical changes coming up or that have been proposed for the FHA loans, which haven't been enacted into law yet but have a good chance of passing. The first of these is that the down payment required will move from 3.5% to 5%. Again, if we use the example of a $200,000 home, that means you'll need to have an extra $3,000 in the bank to bring to the closing table when you buy your home. Another change that they're proposing for FHA loans is a reduction in the amount of closing costs that a seller can pay on behalf of a buyer. This used to be up to 6% of the mortgage. They're looking at changing that to 3%. So again, if you would be buying a $200,000 home, this could mean that you might need to bring as much as $6,000 additional to the closing table of your own money. They're also looking at increasing the monthly mortgage insurance premiums on FHA loans, and they're also looking at instituting a FICO credit score for FHA loans. They have not used FICO credit scoring for FHA loans in the past, which made it easier for people who were slightly more credit challenged to buy a home, and it looks like that might go away. So these are all the reasons that if you're really serious about buying a house, you should be thinking about buying a house in the first quarter of 2010 as opposed to later on in the year.